VYM is a popular dividend ETF from Vanguard to capture high-yield US stocks. But is it a good investment? I review it here. First, note that I don't chase dividends, but I recognize that many investors use dividends to supplement their current income, particularly in retirement. Others simply irrationally prefer dividend-paying stocks. I even designed a dividend-focused portfolio for income investors that utilizes VYM. VYM is the Vanguard High Dividend Yield ETF. It's a very popular dividend fund from Vanguard that launched in 2006. Since then, the fund has amassed over $40 billion in assets. VYM seeks to track the FTSE High Dividend Yield Index. To qualify, stocks must have a 12-month history of dividend payments and also a positive forecasted dividend for the next 12 months. REITs are excluded. Constituents are then ranked by that forecasted dividend, and the top half are selected for inclusion. These holdings are then market cap weighted to maintain sector diversification. As such, VYM can be described as a large cap value fund. On average, larger stocks are more stable, are less risky, and have more predictable cash flow than smaller stocks. Value stocks have also outperformed growth stocks historically due to what we believe is a risk premium. VYM has nearly 450 holdings and delivers positive exposure to equity risk factors like value, profitability, and investment, but has negative loading on size since it tilts large cap. Specifically, the weighted average market cap of VYM is about $150 billion. As I've noted elsewhere, the historical success of dividend investing as a whole is largely rooted in these factor premia. This makes VYM a decent way to capture companies thought to have a sustainable higher than average dividend and steady cash flow. That's why I made it a component in the dividend portfolio I designed for income investors. VYM also happens to be one of the cheapest dividend funds out there with a fee of 0.06%. At the time of this video, VYM has a dividend yield of 3.06%. Since it excludes REITs, this certainly isn't the highest yielding fund out there, but like SCHD, it should be one of the more stable, reliable ones. Now let's talk about the sector composition of VYM. For being a large cap dividend fund, VYM is pretty well diversified across sectors aside from its excluding REITs entirely, but the fund naturally tilts towards some traditionally defensive sectors like consumer staples and utilities. Going back to 2006 when VYM launched and looking through 2021, it has lagged the S&P 500 on both a general and risk-adjusted basis, but has had slightly lower volatility. In conclusion, VYM is certainly not the highest yielding dividend fund out there, but it is pretty well diversified across sectors within US large caps, making it attractive for US investors who don't care about missing out on international stocks, REITs, mid caps, and small caps. Its factor exposure is not insignificant. Conveniently, VYM should be available at any major broker. What do you think of VYM? Let me know in the comments. Thanks for watching. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.